This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. More knowledge, more wealth on AM 590, The Answer. Now here's your host, Gabriel Shahin.
Good afternoon. This is Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth. Here on every weekend talking about all important topics of personal finance. Our goal is to give you the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of our colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's Falcon, WP.com for short. Now, I'm a president of Falcon Wealth Planning. We are a fee-only registered investment advisory firm here serving clients all across the country, folks. And we are offering a free financial assessment really to help relate this show to your specific situation. Give us a call. We would love to help. We cover all important topics of personal finance, going over where you are today, how retirement looks like, taxes, investments, estate planning, insurance, folks, you name it. Anything that involves a dollar sign, give us a call. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We would love to help put together a personal assessment to answer the questions that you may have, whatever it may be. It could be about the turmoil that's going on in the market, talking about inflation, talking about cryptocurrency, talking about real estate as interest rates going up and real estate prices dropping. It could be renting versus owning, leases versus owning. Folks, you name it. We would love to help. And that's what we do on a daily basis because there are very few tax advisors out there that are true tax planners. There are accountants out there that do a really good job at preparing your taxes. And you meet with them once or twice a year to do that. But those are tax preparers, okay? A tax planner is a lot different. They take a look at your situation today. Ask about situations, something as simple as your mortgage balance, something as simple as your anticipated Social Security, something as specific as the income that you're going to be working at, how many credits of Social Security and what your Social Security would be, when to take it. These are things that are not easy to do. And somebody who does your taxes, it's a whole different profession to do tax planning. This is where you need to look at your situation. And are you working? Are you talking with somebody that is able to identify those things? Because what we find more times than not is you are not having those conversations. And that's why, even though we are looking at it, working with the CFP, where we're not the CPAs, even though we have a CPA division, we have, a division that does taxes, we pride ourselves in tax planning. And we would love to help do that. And so a lot of people have questions on that. As the September 15th deadline for businesses passed, as the October 15 is approaching, and year-end planning is around the corner, this is the time you do it. And you have to do this by looking at your pay stub to see what you're paying or what you made, how much you put into the retirement account. Did you save it to a Roth or a traditional 401k? Are you getting a bonus? Have you taken advantage of open enrollment and what's out there where you can take advantage of health savings account, flex spending accounts? These are the things that really matter in your situation. And we just see more times than not where you are not looking at all those aspects. You're busy enough with family. You're busy enough with work. You're busy enough with personal life and leisure and just wanting to decompress of all of the daily annoyance that is out there in the world. So this is why you need a partner to be able to look at these items. You need to be able to communicate with what your concerns are and be able to find out the things that you should be doing. We see this more times than not, folks. And this is why we want to help you do that. And so I know a lot of our clients as well. We meet with them multiple times throughout the year to try to see if they're doing the right thing. Now, luckily, we have it all built in, so it's pretty easy where they don't have to give us much information. They give us updates on raises and bonuses and things like that. But what are you doing to do that? What are you doing to understand of the things that should be happening to make sure you're getting all the answers, all your questions answered? So these are aspects of tax planning that this is the time to do it. You're right now in the crux of the busiest season, which is the Q3 2024 season. It's just a few weeks away. This is the time where you want to take a peek and start to see what you need to uncover. There are situations sometimes where it makes sense to contribute for lower income people into a Roth IRA. The government gives you 100% credit in by saving into those accounts. We see a lot of people not taking advantage of that. So I can talk tax all day long. I love taxes. One of the few people that does love taxes. It's absolutely interesting to me, and I love legal ways to reduce them. I think that could be extremely important for you. Now, by the way, if you're just joining us, you're listening to Gabriel Shahin, certified financial planner, and your host of More Knowledge, More Wealth, here on every weekend talking about all important topics of personal finance. And the biggest elephant in the room is the stock market, and people are complaining and talking about inflation and what that means for you. Now, inflation, get this, rose 0.1% over anticipated. Whoop-de-doo, right? Well, keep in mind, gas prices have also come down in price. So that is a bigger deal when you look at how much it's dropped. In California, it was going from $6 to $5. That's quite substantial, almost a 20% reduction. That's a big deal. But then the other index for inflation, CPI, went up 0.1%. So why is that important? Because still prices are increasing. Now, people are scared of inflation, and I get it. Nobody wants prices to go up, especially when you haven't got a raise yet. Typically takes 12 to 24 months for raises to kick in. Why? Because companies take time to still catch up of raising their prices, making sure clients have adjusted for it, and recapturing their existing clients when they're trying to shop to get it for cheaper. So there are some difficult times that corporations has to go through to make sure, number one, they don't lose their clients, and number two, they can acquire new ones on a consistent basis. These are the items that some people just don't understand. And it's logical, right? When I say it, it makes sense. But for the stock market to drop 5% in one day, almost removing $7+ trillion of market capitalization of our country based on this news, seems a bit extreme. But I want you to know, I have a saying, easy come, easy go. But sometimes also easy go, easy come. What do I mean by that? Well, sometimes the biggest drops in the market that happen, following those are the biggest rebounds. If you look at it, the market is like a little yo-yo walking uphill. It goes up and down, up and down, up and down, but it always goes up. Why? Because your company's goal is always to make money. Now, I know what you're thinking. Yeah, how did that work for Lehman Brothers, Barrett Stearns, Radio Shack, Sears, so on and so forth? Well, yeah, those are individual companies. Now, companies go out of business, but does the United States economy go out of business? Like, even if we get hit by a nuclear holocaust, there's still people going to be living and needing to buy things. You get what I'm saying? And some of these American companies trading on our exchanges have worldwide income, not just America-only income. What's my point is governments, companies, everything's goal, us humans, is to survive. And with that mentality, you have to understand there's nothing to be scared about. Well, yeah, prices have gone up. Short-term impact. Yes, that's less we get to spend, less we get to purchase. We're not buying as much at the stores. We have to be smarter with our money. I get it completely. But with that being said, we've seen this movie before. We always recover, and eventually the salaries catch up, the rental incomes catch up, the stock market catches up. Everything catches up because the more money things cost, the more profit is needed to be had to have that same purchasing power as before. I'll give you an example. 3 years ago, you could probably buy a Toyota Corolla for maybe $24,000. Right now, Toyota Corolla is over $30,000. Okay, so that money is needed. You need more money to be able to buy or replace your existing Toyota Corolla. My point with all that is it's not just Toyotas. It's soda, it's bread, it's eggs, it's milk. Everything has gone up in price. This is where you need to adjust. What is your hedge against inflation? Think about that question. What do you do when the markets, when the inflation is going through the roof? How do you hedge yourself to protect yourself? Think about that question. You can't be in cash because of what I just said. People are like, yeah, well, I want my money safe. You know what I say? You're just losing money safely due to inflation. Yeah, that's an issue you have to be aware of. So what else can you do? Real estate. Well, as interest rates go up, which happens in normal inflationary periods, real estate prices have dropped. You've seen that in the Zillow and Redfin apps as you see price reduction, price dropped. You see it very consistent now on a weekly basis. And it's normal as interest rates go up. You can't afford as much. Seems logical, and it is. It's an absolute science. Basic economics. So when you think about the number one hedge and what's out there to do, you really don't have many options. And this is where the rich get richer. It's because they're well versed in economics. They're well versed in finance, and they're well versed in how global markets work. And what we're seeing is a normal occurrence. We have seen this movie before. We have seen the issues that come up with inflationary periods. Now, we haven't seen anything like this since probably 40 years ago during the Jimmy Carter years. That I agree with. But when you take a look at how markets respond, that's the important part. How you respond. You're going to be smarter with your money. You're going to look for a place that gets you more money. You're going to need to. Naturally, think about it with you. If you were making $30 an hour and you were living paycheck to paycheck, and now you're realizing, oh my gosh, I need more money, I'm getting credit card debt, you're naturally going to look for another job. And it's a great time to look for another job with the unemployment still at 3%. It doesn't feel like a recession with that being said. Normal recessions have high unemployment. So this one truly has an impact on arguably the printing of money that's been out there, the cycle that we've had where we have been in a low interest rate environment for arguably 40 years, started really high and it's been dropping arguably ever since up until now. Things revert to a mean. So how are you going to protect yourself? What I'm going to do when we come back, I'm going to discuss with you how you should protect yourself, how you should be aware of the best hedge against inflation. And it's no surprise, but I'm going to go into detail of the why behind it. Because the market crumbling right now, that 5% drop in one day, I believe is Tuesday, is not that big of a deal. I'll be right back after a few words. Welcome back, folks. This is Gabriel Shahin, Certified Financial Planner, your host of More Knowledge, More Wealth. You're on every weekend talking about all important topics of personal finance. And today I wanted to discuss with you what's going on in the inflation world. We had the stock market drop 5% the other day, and it was overwhelming. I mean, it seemed like for no reason. I saw 0.1% increase of inflation, and I'm like, so the market drops 5%? That seems a bit, what's the word I'm looking for? Excessive? So what does that mean? Well, what that means is things are getting more expensive. And we talked about last segment discussing what does that mean for you and how to hedge against this. Like, what are you supposed to do? I mean, you have rental income, you're locked in for a year. You can't just raise rents and you're living on that fixed income. Same with Social Security. They just gave a raise. You have to wait another period of time until the next raise comes around. It could be your job. Jobs take 1 to 2 years historically for you to get adjusted to inflation. So what does that mean for you? What to do? Well, the number one hedge against inflation is the stock market. It truly is. Yes, the stock market got crushed, but that's not a bad thing, especially if you're buying in. And if you're currently invested right now, well, you are diversified. You're not losing. You shouldn't be losing 5% in one day when the market's down 5%. Why? Because that is what's happened in the U.S. stock market. There's global markets, and there's not just large companies, but medium and small companies. So you really need to be looking at your situation and understanding why is the stock market the best hedge against inflation. It's because it's the direct impact. Some of the best hedges against inflation is being a business owner. Why do I say that? It's because when you're such a large corporation, at the end of the day, you're going to have to buy Coca-Cola. You're going to have to buy Pepsi. Regardless of the price, you're not going to stop drinking it. Same with coffee. So what is my point? The point is simple. They're going to up their costs before anybody because they know you need to buy it. And their costs are directly affected from their material costs, whether it's aluminum, whether it's shipping costs, where they're getting it from, or where they're sending it to. So by being able to address that instantly, the stock captures that by their next earnings in 3 months from now, when they tell you, hey, we had to raise costs, which means naturally, if they used to net $1 billion, Well, because their costs gone up, let's say assume their costs doubled. Now they're not going to net 1 billion, they're going to net 2 billion. It's as simple as that. So now they're going to be like, wow, look, we get record profits. Now, granted, that 2 billion was just as good as that 1 billion because all their costs doubled. So if that $1 billion used to buy 10 billion of soda pops, well, now that $2 billion is necessary to buy that 10 billion of soda pops. You get what I'm saying? It's all relative. But when you're a shareholder, the stock of the price naturally goes up. It has to, because it's based on the net profits. It's based on the price to the earnings of what they're making. And if it gets too low, it's so cheap. The price of the stock can't sustain it. Is it going to be trading where you can buy the whole company for $1 billion if it's netting $1 billion a quarter? No, the price has to go up, because if that's the case, a Warren Buffett or somebody will come in there and snatch the whole thing. You get what I'm saying? These are key elements to understanding basic economics. And this is what we like to help educate with. This is what we do with our clients. This is what we try to do on a daily basis. And we invite you to take advantage, to ask your questions that you may have. This might be a fearful time. This isn't the time you sell. This is the time you buy. As Warren Buffett says, when those are fearful, be greedy. It's actually when those are greedy, like last year's, when you should be fearful. When everybody's making money, that's when you should worry. If you want help with this, we would love to do it. Give us a call. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We can help relate this show to your specific situation. It's crucial that you don't freak out about what's going on in the news. If you think about the relevance of the story that came out and the drop that happened, it's really shouldn't not have been that big of an impact. How the stock market works is it takes the information today and it tries to figure out what the ripple effect of that is in the future. That's how the stock market works. So the ripple effect in the future is on something like this. Yeah, is it impactful? Sure, but is it impactful to drop that much? And even if it did, is it for that long of a period of time? Typically, when inflation slows down, when our Feds say they're going to stabilize on interest rates, when Q4 comes around and we're no longer in a recession because everybody spends all their money in Q4, during the holidays, through traveling and so on, then what is the market going to do? When interest rates have slowed down, when inflation has slowed down, and people are spending more money, which means officially that inflation is over, then what? Stock market rebounds and rebounds aggressively. By the way, folks, if you're just joining us, you're listening to Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth here every weekend, talking about all important topics of personal finance. Today, we're just talking about this inflationary period, the stock market, and just in general, how it affects you and your portfolio and how you should be reacting to that. This is not an uncommon situation that we've seen ourselves in. We have seen inflation. We have seen market drops. And look at every single market drop that's happened in history. When you look at a situation like now, it's not that bad compared to wars. It's not that bad compared to financial meltdowns. It's not that bad when you're looking at the 9/11 and the tech bubble. It's not that bad when you look at all these things. But yet, people are freaking out more than ever because the lovely media, all they do is scare the bejesus out of you. Which I have a hate-love relationship with them, and I've said this multiple times. I hate the fact they scare you. And you sell things because you're seeing on the news, oh my gosh, I'm losing all this money, I need to sell or I'm never going to recover. That goal is to scare you. That is not okay. And I strongly dislike the media because of that. Now, the love side of the media is I need people selling, novice investors selling, to drop the price so I can buy on sale. That's how it works. When you're selling, somebody's buying. Now, stocks, institutions normally don't buy. They typically stick in the index realm. And that's what I recommend for you guys. And a lot of people are doing that, and I'm proud of you for doing that. But being disciplined is sometimes more important than being smart. Seeing that you see a sale out there used to be valid, but now things are so dynamic. A great company today can be a bad company tomorrow. It could be something simple as a political statement a company does. It could be a CEO going crazy. And all of a sudden, this affects the stock price. This affects consumers saying, I'm not going to want to buy this product because I don't believe in their leadership. This is why at the end of the day, people is everything. People is why you stay at your job. People is why they excel and get promotions at their job. It's because of you. And your personal relationships, it's because of you. It's because of people. Success is different from every single person. Why? Because each person values money differently, happiness differently. So this is where you need help. Everybody needs help. I need help of identifying from an unbiased third party. Here's my situation. What do you think I should do? Give me an outside opinion of what I should be doing. Because you know what? When there's a fork on the road, what do? Go left or you go right? Yogi Bear says, let's pick up the fork. But you get what I'm saying? This is where it's no skin off your nose to get a second opinion. And I would recommend and echo that you do that. Give us a call, folks. We help people all across the country. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, where we can help put together an assessment to answer those questions that you have. Take a look at what you have, making sure you're not overly concentrated, making sure you're properly diversified, making sure you are well equipped for retirement, for the financial goals that you have and the dreams that you're looking to achieve. But the dreams are not dreams without a plan. You need that. You need to have a documented plan of how to get there. Because if you don't, it's not a goal, it's a dream. You need to have those steps necessary. And we see that often, folks. This is why you should take advantage of our assessment. And this is why you should have a trusted advisor that you should talk to. And some people have their accountants, some people have their attorneys, and some people have their financial professionals. And I respect all of that. But at the end of the day, is it unbiased? At the end of the day, how are they compensated? And at the end of the day, what value are you being provided? How well do you know them? And so sometimes when we get clients, we get a lot of clients. We're blessed with the amount of clients we get, hundreds of clients on a quarterly basis. That's fantastic. And we're changing lives doing that. And we're blessed to do that. We've helped 10,000 plus people on an annual basis, which just is amazing to do. With that being said, it's, sometimes we take them. Some people say, oh, you're stealing clients from other advisors. I like to think we're rescuing them. I mean, with all due respect, what value are they doing? Just managing your money? Are they talking about anything more? Are they talking about tax strategies, Social Security strategies, cash flow strategies, reduction of expense strategies? Are they talking about these things of how to control Medicare costs, how to maximize Social Security? What tax strategies can help reduce your taxes today and throughout your retirement? Most advisors can't even give tax advice. You get where I'm going with this? So if you need help with this, we would love to be there. I know our clients, I'm very fortunate to have helped the lives that we've helped and continue to help. It makes me sleep very well at night knowing that I can do that. And a lot of our staff, all being CFPs, all being salaried. This is unlike anybody in the industry. We'd love you to give us a call. We'd love to help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's Falcon, WP.com for short. Folks, that was a fast show. I want to thank you for tuning in with me. Feel free to reach out to myself or any one of our colleagues here at Falcon Wealth Planning. We help people all across the country. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We'd love to have a confidential, personalized conversation to help relate the show to your situation. We want you to have a great weekend. Have a great week, and God bless.